Our investment analysis looks very much like the investment analysis, I imagine, of a standalone fund. The first thing we ask ourselves is how good is the team? That's critically important. Then we look at the product. Is it a compelling product? And then ultimately you ask, is there a product market fit that will result in profitable growth? We do go one step further in that we ask ourselves, is there something that we can bring to the table in addition to money? And that goes back to leveraging who we are, our platform, and our assets.
How would that translate in actuality? In other words, does that mean, for example, advertising on the Comcast platform or the marketing lines that you guys have? What kinds of ways could you leverage that?
Exactly. We have a division in the fund called Forecast Labs. Forecast Labs offers a number of products, including television advertising product, where we help our very early stage companies realize that TV advertising can often have a better ROI than other forms of advertising. In addition, we have a white glove broadband service, which you can imagine is critically important to a company just launching. We have a direct marketing service, any number of other products that we are able to create out of the fact that we are Comcast and we invest off this incredibly large platform.
You know, you talked a little bit about the mega funds leading to mega valuations and how you don't really want to play in that space. But I'm wondering, given how much money has been raised, I imagine there's also a lot of bidding going on at this seed stage. I'm wondering how valuations appear to you at that point in a company's evolution.
Yeah, there's no question the valuations are high across the spectrum. But again, you know, we see that as an opportunity. We at Comcast Ventures see that as an opportunity in that we are increasingly able to bring more than money to the table and win investments at a very early stage.
And going forward, you said that the main motivation is financial, that you're not there as a philanthropy arm, that ultimately you want these companies to be successful and make money. What kind of returns are you looking for?
You know, we're looking for venture returns. You know, we want to see 3x, 4x, 5x, 20x, if possible. So you're absolutely right. At the end of the day, we measure our success based on financial returns.
There's been also a lot of focus on tech startup valuations and how high that particular area, how lofty the valuations have gotten there. Do you think that that's an area of particular concern?
I actually think we're going to see the pendulum swing there in 2020. There's already considerable amount of talk in the market about good growth, profitable growth, sustainable growth, instead of growth at any cost. So I do think that you'll see those valuations moderate to some extent in the next year.
Does that mean a washout of some sort with some companies either folding up or consolidating into others?
No, not necessarily. You know, I think it probably suggests that you're going to have companies sort of focus more on keeping their heads down. And realizing margins that result in profitable growth.
Just lastly here, I'm wondering, are there particular industries where you're completely avoiding the startups?
Nothing that we're avoiding, but we're certainly seeing a lot that we're excited about. You know, the categories that we, Comcast Ventures, will be focused on in 2020 are categories like insurtech, real estate tech, enterprise automation, cybersecurity, and then, of course, one that I'm particularly excited about is the rapid growth in the audio ecosystem.